This is a quick series on why I will never pay off my mortgage, and how it might make sense for others to do the same. Check out the video description or top comment for the series playlist. Subscribe for more content like this. We focus on unconventional strategies to accelerate wealth growth. Why I won't pay my mortgage off early. Well, we're looking here at my returns. So over this page shows 26 years of having this policy, and my internal rate of return by year 26 should be around 4.72%. And this is the following page. So we can see that that's still continuing to go up until we get slightly, it looks like we top out at 4.92%. And the reason why this starts to shift, this is when I'm in my 80s, the cost of insurance starts to increase. And in actuality, this will probably top out over 5%. This is showing me continuing to put in the 60,000 as I get into these later years. I will probably, this little 2 here and this here, this is actually representative of this becoming what's called a modified endowment contract, and that's what I want to avoid. So I will be likely at least reducing the amount of money that I'm putting in at that point when I'm in my 60s. To me personally, I will want to pay for this as long as I can because it's giving me a return of that 4 or 5%, maybe even slightly over 5% over the long term. So I will want to continue to put money in here as long as possible. It's effectively as close to a guaranteed return as you will have over this long of a period of time. And so that's why I won't pay off my mortgage, because at any point I could take from this to pay off the mortgage. I could either do a withdrawal at some point down the line. You can withdraw up to your basis, so the amount of cash that you've put into the policy. Most of this will be from interest gains, so I can't directly take out interest. I can take policy loans, but 20, 30 years down the line, I could always take the amount of cash that I've put into it and pay off the loans and still have my cash value continue to grow. So there's a lot of options, and this is why capitalizing a policy like this makes a lot more sense than paying off a mortgage early, because I'm getting a much better return. Yes, we're in a different interest rate environment right now, but the reality is too, if you want to make some early payments and pay off a little early when you're getting 6, 7, 8% mortgage, that can start to make a little bit of sense. But also keep in mind that the rates should not be like that forever. It's quite likely that our society's kind of gotten addicted to cheap money, so it's quite likely we're going to see those rates come back down over the next few years. I'd say rates will come down in a significant way probably sometime in 2024, and then at that point you can do a refi. I wouldn't do it right away, but it really sort of depends. When you're considering doing a refinance, there's a lot of factors in terms of what closing costs are, how long it takes to recoup the closing costs for that refi. You can do things like negotiate with your lender to have them eat some of those costs, especially when they're hurting. The lending industry, the mortgage lending industry is getting hurt by all of these rates. So that's where you can get competitive. And when you have something like this, where it's like when I'm in my 60s, this policy will have millions in cash value, and by this point, if I don't cash out refi my mortgage, I will have something like my mortgage will be paid off. But let's say I did do a cash out refi on my mortgage, and then I decided I didn't want to pay a mortgage anymore. I can draw from the cash value in this. I can draw from this and pay off the mortgage. Then I don't have a mortgage anymore, but I still have allowed for 30 years of compounding interest in this policy before I chose to do that. So this is why you should look to get a policy like this enforced on yourself, assuming you have a decent health rating. A whole life policy is a good option. Index or universal life is also a good option. I have both of these things. So in total right now I'm putting in $130,000 a year between my policies. So if you're interested in getting started with this, check the description below. We can help you out in getting started with this. You don't want to go to just any insurance agent, insurance business, because most of them are designing these high commission designs that will cost you a ton. My policy as designed breaks even in about 5 years. That should be your target, or in this, hopefully you can get a 5-year break even. Again, depends on your age and health rating. In whole life, 5-year break even is pretty good. If you're young, maybe 4 years, even less with an index universal life policy. So getting this started as early as possible and when you're still healthy is to your benefit. So check the video description if you want to work with us. And even if you have an agent that you want to work with, we could help you get something for them to use. But I think, in the end, working with us is going to be more advantageous because we're using these policies. We know how to use these policies to generate and build wealth, and we'd love to help you do the same thing. I don't come from wealth. I spent almost 9 years as enlisted Army infantry. I have no college degree. I've been investing pretty much my entire adult life, and there are things I wish I knew about years ago. Too many finance channels and forums focus on the same tired things, and I'm not saying you shouldn't do them, but I am here to show you some more tools to succeed. Drop a like if you found this video helpful, comment if you think I'm crazy, subscribe if you want to grow with me.